Buttons on. Very good. Session is being recorded. Today is, I believe, September 5th, 2016. This is a free market update webinar, market and stock update webinar, Monday, like I said, September 5th, approximately 9:10 p.m. Eastern Standard Time. The session is being recorded and will be available for all to view on the Clueless Safe Trading YouTube channel. Full disclosure, this is purely for financial education and not for any solicitation or advice. Let me start off this very important ACS, so short acronym for Advanced Coaching Session, webinar by congratulating every single member, including Mr. Corey, hopefully, who still has Monsanto, correct? I hope so.
I got a bunch. I got a bunch.
There you go. You know the news tonight, right?
Yeah.
Exactly. The stock's going to pop open minimum. And of course, anything can happen, but just generally speaking, high probability, the stock very early in the morning, you shall see it trading up to 125. Now, if that's not a home run, and we have gotten quite a few of these, as you know. Okay, last one that we caught was Metavision, MDVN. We have caught quite a few of these buyouts. And
you caught JetBlue too just recently.
That's right.
Not
JetBlue. Virgin
yeah,
Airways.
Virgin.
That's right. That was a few months ago. And we will catch more because the ones that I keep on in my card, I believe, like I said, obviously not every one of them is going to go, but I believe Clovis will be bought out. CLVS. Okay, I do believe that at one point or another, Twitter will be bought out. Of course, it'll probably be not that much of a premium from what we think it can be, but you never know. Okay, people with deep cash pockets, companies which find a value in Twitter that you and me sitting here on the sidelines might not see, are willing to give it at least a 40% premium for where you are. So 40% premium, you get $8 on it. You know what it is. Okay, Armin, welcome. We have another member here joining us. Okay, so bottom line is that this is what, you know, the trick to these things are, it's not going to happen in our time. So what we got to do is we got to just keep over rolling the cheap options. I did that with LinkedIn. And what a day it was. I kept on rolling it. We even talked about it the day before, and bang, it happened from nowhere. And $4 calls went to 64. And these ones are going to be equally good. I mean, not equally good, but they're going to be good, very good. So the bottom line is that this has been happening quite often, more than not, because I don't know anybody who actually, I wasn't calling for a LinkedIn buyout to start with. Nobody knew that. That was the ultimate surprise. It was ultimate lotto ticket. But we looked at the charts. We liked what we're seeing. We kept on buying it from the crash down. Okay, and a crash up from the point, and all that is posted and documented on my Twitter feed, posted and documented on charts that I post, and of course the YouTube channels. So the lesson that all of you who are not in Monsanto, and honest to God, don't take me the wrong way, that's your punishment. Okay, because it doesn't cost that much to be in Monsanto in the calls, and I'm talking in the money calls. I wasn't buying 110, 112, 113 calls. Stock closed at 107. I kept on telling people repeatedly, buy 107s, 106, 107s. So whatever the case may be, ladies and gentlemen, okay, it's just the way to go. You never know when these buyouts come. And as we get into that verge, and we're going to cover that right now, as we get into the verge of a rate hike cycle, whether it be one rate hike, whether it be two rate hikes, but the fact is the mental momentum, that's the key word. The mental momentum of the markets is we're on a rate hike path. It doesn't matter whether they do it in September, they're going to do it. And when the first one comes, the market's going to choke a little bit. And somebody said, why? You know, some people who don't understand behavioral game theory, they'll say, why? The market wants a rate hike. Sure, they want a rate hike. But when they get it, they're not going to like it, even though it's going to make no difference to the markets whatsoever. But it's going to make a fundamental difference to emerging markets, to global markets, because global markets have a major effect on U.S. rate. I mean, suffer a major setback, minor setback, again, on U.S. rate hikes, because currencies are correlated based on what the U.S. dollar is going to do. Now, if the U.S. dollar doesn't shoot up, let me hold that thought for a minute, because I'll explain that in a few minutes. So anyway, so the point is that as we get towards the beginning of the rate hike cycle, whether the cycle starts to September, whether it starts December, doesn't matter. But as we get to the beginning of the rate hike cycle, you're going to see more and more and more mergers and acquisitions taking place. It's almost like somebody holding back a lot of cash and not buying a house, and they always plan to buy a house. And as the rate hike starts to creep up, and the mortgage rates, which are at historically cheap levels, I mean, it is unbelievable. You can get a mortgage at 4%, a 30-year mortgage. I mean, come on. If that's not affordability, I don't know what the hell is. Okay. Now, yes, they have stricter requirements. You got to put 20% down, whatever the case may be. But let's say somebody saved up a decent sum of money. So the minute they start feeling that sense of like, oh my God, rates are going to go higher, what do? They rush in there to lock in the contract, the sales contract, to buy that place and lock in the mortgage. That's just the way it works. Okay. Big jump in refinancing. They're like, oh my God, we're not going to see these rates again. But in the meantime, they're sitting there on the butt, SOA as I call it, sitting on you know what, okay, doing nothing. But the minute push comes to shove, the mental momentum, the key word is mental momentum, that, okay, rates are going to start rising, they are to do that. Well, guess what? Corporations behave the same way. Because a lot of these are they're not just being fined. It would be stupid for a corporation to use up just pure cash to buy a company. They obviously want to use cash, and they want to use leverage. That's just the way it works. Ever heard of a really successful real estate guy who used his own cash to buy property? If you ever heard one, he's not that successful anymore. They leverage, whether it be Donald Trump, whether it be other major real estate investors like Sam Zell, the Canadian billionaire, okay, or whether it be other very successful real estate investors. They always use leverage, or like you say on Wall Street, OTM, other people's money. They don't ever use their own money. Okay, that's just the way business works. So the only time we use our own money is the individual. Okay, the individual person feels that, oh, if I use cash, I'm a real genius. Very idiotic. Real smart money, never. Of course, you have to use your own down payment as your cash and stuff. But then, depending on your credit, depending on your income levels and stuff like that, you want to use leverage. So corporations do that too, except corporations do it in a massive way. Okay, so the bottom line is that you're going to see more and more M&A come through. You're going to see a lot more companies being gobbled up at this stage of the economic cycle, because money is still cheap. And I'm sure everybody understands that. Okay, so when money is cheap, it's annoying. When money is cheap, you want to take advantage of it. What are you going to do? Go into a real M&A, mergers and acquisitions, takeover frenzy when rates are at, let's say the 10-year government bond, which is trading right now, as I've always, I've constantly pointed out, at a historically low level of 1.6% or so, where you're going to really finance your things at your mergers and acquisitions when the 10-year bond, which is the proxy for the remainder of business and consumer rates. Okay, well, business rates is actually LIBOR, London Interbank Offering Rate. So you're going to do that when it's 4 percentage points higher? Just giving you a hypothetical example? No, you're going to do it when the smart time to do it, when rates are still cheap. So that's a key ingredient for M&As that are still on the table. To get ready for it. So pick and choose whatever, I've picked some real decent ones. You're going to see a lot more on the biotech side, no question about it, and they're going to come off the blue. Now, couple of very, very important things here on the market side. All right, and I want to keep this session somewhat reasonable because I don't go then in those 2 hours and stuff. I get way too exhausted. So I'm going to try to keep it within an hour, 2 hour and 15 minutes, an hour and a half. So very important. We have a bunch of new members, great people. Okay, we have House, we have Tim who's come in recently and stuff. So everyone's kind of getting used to the style and what's going on. Now let me put in some very honest and straightforward reminders. I do my best as much as I can within the time frame that I have, within the physical constraints that I have, to put out some really, really powerful information out there. Okay, it is I cannot in any way or form guide people on every individual trade. Just it's not physically possible. But I will certainly put out enough markers, enough broad comments such as when the markets are about to crack or when I think they're about to crack, and I've been wrong here and there, believe me, because this market's way too strong. So the point is I think, okay, there might be a real correction here, and then he made some money on the downside, and before you know it, the market turns around, and we're going to talk about all that stuff on the technical analysis part of the session, and then it just takes off and as if like nothing happened. Okay, I have seldom traded. I've traded quite a bit. And I've traded real volatile markets, believe me, when everybody just literally not just got helmets on, but they are so deep in the bunkers that they don't even know where the heck they are. Okay, and I don't mean just our members. I'm talking the rest of the world. Okay, but these are truly volatile markets, no question about it. And the intraday volatility is intense. Saying all that, I will do my best to alert people to a large degree on what when I'm taking down my fast trading positions, and that really what matters, because the rest of the stuff is the swing trading position and stuff, which I will always have some position in, because the thing that one has to keep in mind, very importantly for a lot of the new newer members, is I'm not a ditto trading service. Okay, nobody can mimic my book. And even if they can, my service is not designed for people to mimic my book. My book is pretty wide, to be honest with you. I do put a bunch of stuff that you guys have no clue about. And it's my personal stuff. But I put enough, but the trades that I'm putting through, just always remember, I'm always involved in that trade. So it's not like I'm just putting a random trade out there and saying, okay, guys, good luck, see you later. I'm not in it. I'm with you on that trade. No doubt about it. But there are other stuff that I'm doing that I don't always share. Okay, but I share but whatever I share is I'm involved in it. So I am not a ditto trading service, as people are getting used to my style. And there's no way in the world you can mimic my book. Period. Okay. Now, the three types of trades that we do as traders, right? You'll know that. We do fast momentum trades that can last intraday to maybe a day or two. We do swing trades that we sit on. We roll over that position. In common, of course, we just sit on it. And Monsanto is a prime example. Okay, Metavision was a prime example. LinkedIn was a prime example. Clovis is another prime example. There's a bunch of them, and those ones are swing trades. So regardless of market, the long-term fundamentals, whatever they may be, I am looking to hold them. Then there are some small cap ones. So that's the second type of trade, swing trading. Now we can also do swing trades on high momentum stocks too. When Amazon was trading at 700, 720 bucks, 740 bucks, that was a swing trade. To me, Amazon is not a swing trade right now. Somebody might argue with me, hey, it's going to 800 plus. What the hell, you stupid? Yes, I'm stupid. I don't care. Okay? Because the market is in a path right now where it can drop 400 points from nowhere. I mean from nowhere. You can wake up one morning, which you have seen many, many times, and you're just like, holy shit. Okay? And the momentum continues downward. The market is not at a point, where you're starting, in my opinion, I could be wrong, that we're at a springboard or a pivot where the market is basically starting another journey of another 1,000 points higher. Nope, it's not. What the market will correct, and once it corrects, then we'll see. Then we'll determine where we're going with that. So from a standpoint of the three types of trade that we do at the Clueless Ape Trading Service is fast momentum trades that can last anywhere from an intraday to maybe a couple of days. So that could be constituted as a mini swing. Then we have real swing trades that we basically hold on and sit tight. A lot of the buyout ones, the biomarines and things like that, Clovis, Allergan to a certain degree, a bunch of other stocks. We wait patiently. Then we have small caps like REN. I pushed REN hard about a month ago. How much was the stock? 6, 7, 8, pull back, pushed it hard again. I'm not pushing it every day. I said it's a long-term swing trade. I even put out, reminded people of the chart. Where's the stock today? $23 frigging. So no one can come to me, as some people sometimes have done, not you guys, and say, hey, you know what, I don't really have time to do these day trades. I'm like, listen, don't bother me with this stuff, okay? Because I will take valid criticism. I certainly will. I will take valid constructive feedback, which is good for everybody and for me. I'm a straight up guy, but I'm not going to take bullshit. When people, oh, it's a day trading service. No, it's not a day trading service. We have, in fact, our biggest money's been made, believe it or not, off swing trades. And people know that. Guys who are serious traders, and I get it. There's a lot of people who are not in the chat room. In fact, the majority of my members are not in the chat room because they're busy doing what they're doing. And they send me a quick text or a thank you or this and that, and they tell me what they're doing. I'm just like, wow. And they're not day trading. They're not day trading. So that's, so the small cap ones, like whether it be REN, I'll give you a couple of examples, you know, whether it be MGT, whether it be Nimble, whether it be BEAT, BEAT, okay, which was recommended, I believe somewhere around, and I know some of my, the members who still have a bunch of them, which was recommended, I believe, around, I'm saying the top of my head, $11, $12 was the stock, 21 and change. Okay, 21 and change. I'm sorry, $19. 52-week high is at 21. Momo is another one. Okay, Chinese internet company. That was recommended somewhere around 11, somewhere between 9 to 12. Where's the stock? 25. Now, somebody might say, so that's the third aspect of the trade of these type of companies. Now, those type of companies, you know, I'm not going to micromanage them for people. In other words, I'm not going to like, oh, I bought it here, I sold it there. That's not what $60 a month or $80 a month does. If I'm going to offer that type of service, you got to pay me a lot more, because that's just the way it is. Because the amount of content that I deliver, in the form of very tactical and precise charts, or at least charts with real road markers on it, where you can drive these, where you can drive the car through these very treacherous hills, which is the stock market, okay, and know exactly when to turn or when to basically bail out or stop or whatever the case may be, you know, using the driving analogy. Amount of video casts, amount of Periscope broadcasts, and nowadays, in many cases, I screenshot one of my screens on a real-time basis and provide some brief commentary on that stuff. That's a lot of information. And even these free market update webinars in detail explaining a whole bunch of stuff, that's a lot of information. And for you extra bucks, you can sit, you know, there are people with me who pay me serious money to work with me one-to-one to a level where if you see what the heck they're doing with their portfolios, it's mind-boggling because they're serious about it. And then you have people who are, and I'll say it, who are stingy enough not to pay $40 a session, which is cheaper, and I've said this 100 times, that you pay your Mexican gardener. Okay, somebody called me a racist. Okay, I'm sorry I said Mexican gardener, but a lot of these great people, you know, a lot of the people, you know, who do these menial job are Mexican. Okay, or you don't see an Irish gardener, right? You see a Mexican gardener. So the point is, and please don't call me a racist. Anybody comes up and says that, I'm going to smack them. So the point is that, I get paid less than that, and yet they're stingy enough not to sign up for it. And what happens to them? They don't understand half the stuff I'm putting through, and they suffer. Well, God bless them. If they want to keep on going down that path, let them do it. Because going forward, one of the things I'll do is, and I will strictly do that, I'm putting out a lot of stuff across. And I want to get paid for that, period. If they're not happy with it, they can leave. And I will implement that, because it bothers me sometimes that the amount of information that I'm putting out there and the constant engagement that I'm having with my members and my free trial subscribers, and it's just getting way too exhausting. Because these markets are going to get so dangerous on the upside and the downside. I can assure you, ladies and gentlemen, you all, if you're not connected, and I'm not saying that every one of you have to sign up for ACS, but if you do not understand the dynamics of the amount of powerful information that I'm putting through and how to read them, and you might think you know how to read them, but you don't, okay, you will suffer. That, as friends, is a guarantee. Saying all that, let's dive in. And I say all this in good faith, all right? But I have to be once in a while. I can't be Mr. Super nice guy all the time. I got to be like most of the services are, who are a little bit more apathetic towards their members. So saying all that, let's take a look at what the heck is going on here with the markets. So I'm going to go back a little bit here on the daily, move back all the way down and pull up a Actually, I'm going to start off with the investing.com chart. And I do want to remind people straight out, you have to have a platform, at least one of them, or charting platform, okay, which mimics mine. So in other words, it has to, one of them has to match one of the platforms I use. The four that I use primarily, Thinkorswim, investing.com, which I've been using more and more because they're so easy on the eyes, okay? freestockcharts.com. Investing.com is free. Just register. Just register and you can use it for free. Thinkorswim, you got to have a small account with them. Some people say, well, I deal with Option Express. And I said, who cares? Put in $100 with Thinkorswim, open the account, and use the services till you get into them. I used Thinkorswim for 2 years. I wasn't even doing any trading on them. They're one of the best, both in execution prices, speed, which is a very critical ingredient to the markets that we're in, and the markets we have been, and the markets we will be in. Okay, TOS is one of the best. And their charting, it's rocket science. So you open up an account there, put in a little bit of money, at least get access to all their fantastic tools that they have. freestockcharts.com is also free. And all you got to do is just sign up. You don't have to pay for the paid system. These are great tools also for Free Stock Chart is easy on the eye because I'm a visual trader. All the technical mumbo jumbo, all the different patterns and stuff, all fine and good. But if it's not easy on the eye, it's not going to do you anything. There are guys on StockTwits who are brilliant chartists. I don't even understand the friggin' charts. So if you don't understand the charts, then obviously you have a problem. Okay, so this is a good one. So, and the final one that I use, which is the best, and I've mentioned it a zillion times, is the Algo HFT Quad platform, QUODD. A bunch of you have started using it, and they're benefiting from it tremendously. In fact, a couple of my members who are just using it exclusively are doing so well that it's mind-boggling to me, because they're just working off those things on charts, both on the swing side and on the intraday side. So that's the Quad platform. So out of these 4 platforms, you got to mimic at least 1 or 2, because that way you can say, okay, this is what the chart looks like. This is what it looks like on my screen. If you try to replicate my charts on whatever other platform that it is now associated with, for example, TradeStation and stuff, which are really excellent services too, I can't help you because you won't be able to mimic it. yes, you can, the indicators, I mean, the prices is going to be the same, indicator is going to be the same, but it's going to look very different. I'm sure that's clear. What I said in simple English is clear with everyone. So let's take the look at the easiest on the eye, which is the this is the E-mini futures S&P, which gives you a real-time obviously you guys know that, you know, real-time representation of what the heck's going on, and this is actually picking up stuff right now as we speak. This is real time. It's moving and it's free. And how great is that, huh? Investing.com. So this is what we're going through. We're going to use the reference point of beginning of August. In fact, the 2nd of August, right down here when we're at 2141. That's what you do in on, at least I do on my technical analysis site. I look for a reference point which is the lowest or the highest, right? So the lowest reference point at this point is 2141 on the E-minis, which should translate into about 2145 or 2146 on the actual S&P 500. So saying all that, we draw a uptrend line from that point and make it a little bit, oh, come on. Seems to be having some Java issues. 1 second. Let's make this thick. So there's one big trend line, okay? And that would be the bullish trend line. That would be the very bullish trend line. Because what I did was, I looked at the first point of engagement, this consolidation channel, okay, this one, and we touched it. Then we take another line, and we go and we try to touch as many points as possible, and that would be the only one that I can think of. Well, you can draw another one if you want to be a little bit thing. You can actually draw this one from this point. Sorry. Okay. And make this a little bit lighter on the eyes. That's it. That's what it is. And these are more, yeah, you can draw these, but you know, we can draw one more, which would be like this. Okay, how about that? Okay, good. Now, let me be very clear about something here. We're trading in a very wide band, right? I've talked about this before. That band is roughly 2165 on the E-minis, roughly 2170 on the S&P 500. That's why 2170 is such a powerful support level. On the E-minis, it's around 2165, and the upper end is 2190. So this is the broadest band that we're traveling in. Or somebody might say, well, we're actually not traveling in that. You're incorrect, Frank. We're actually traveling at, how about this? We're actually traveling in a band of more like this. Okay, because after all, you know, we have dipped towards that point, which is 2154. I say, okay, I'll accept that. That's fine. Now, let me just be very clear with you guys all. Okay, these volatility patterns on an intraday or intra-week basis are just plain old simple, pure, unadulterated, excessive volatility. No complaints, no regrets. It's just excessive frigging volatility. These are not patterns that you can define on your own and say, okay, we're on this beautiful head and shoulders, or there are patterns I'm detecting and showing you guys. Every single time that these things are happening, I am showing you, 1 second, I'm showing you inverse head and shoulders. Head, left shoulder, multiple right shoulders, and it's working. Head, left shoulder, right shoulder, basic inverse head and shoulder pattern, which is bullish. What's head and shoulder? This is a head. Here's a left shoulder. Just the opposite. This is the negative pattern, right? Inverse head and shoulder, bullish, head and shoulder, bearish. People who have no idea about technical analysis, that's how you just remember it. Inverse head and shoulder, bullish, and head and shoulders, no good. It was funny. I was laughing. It was Kramer was talking about the most basic technical patterns. Anyone heard that on Friday? Anyone heard that? I mean, I was just laughing because this is stuff that I teach from talked about from day one. He's talking about inverse head and shoulders. He's talking about, what was the other one? I forget. I mean, there was just such basic stuff, and he made it sound like, oh, this technical stuff, guys who follow it really do it. I just please. So anyway, and now he's going to take full credit because he was talking about Monsanto too. That it was this consolidation pattern. Well, I've been talking about it for a while now, but I'm not comparing myself to Kramer. Kramer's Kramer. He's a media personality. But I'm just saying that, it's what we talk about considered to be basic knowledge in our service is considered to be high level knowledge when it comes to the media. So here you have and please everyone focus for a minute. So here you have a head and shoulder. That's negative. I'll put it as a minus. If I'm going to change the color here so people can see it. Choose pen color. How about I choose a blue so it's cleaner. And it doesn't change to blue. Great. So then I change it to blue. Okay, won't let me change to blue. 1 second here. Let me take this out.
I think you have to click on the pen on the top.
Yeah, choose pen color.
Right now it's red.
No, it's not.
No?
It won't give it to me yellow. Hold on. Hold on. I'm just gonna put black. You know what? It's just one of those weird things. Doesn't matter. You guys can see it. That's what matters, right? You can see it?
Yeah.
Okay, good. As long as we can see it. So this is what's going on. We are seeing multiple patterns manifest themselves within the same trading range. You have a negative head and shoulders that the bears have been screaming about, and rightfully so. And rightfully so. You have a head, you have a left shoulder, multiple left shoulders right there, and the market just can't get over it. You have a head, left shoulder, right shoulder, and bang, the market crashes. Okay? So, and then simultaneously, and this is called trading within a band and a range, but it's happening so fast that people are just getting, they're going with, let's put it this way. There's an old term in English. It says ignorance is bliss. You guys heard that term, right? Yes? You know the meaning of the term ignorance is bliss?
Yes.
Yeah, simple. The less you know, the better it is. Well, I don't follow that theory in life, okay? But the point is that when ignorance is bliss with traders, sometimes they hit some real lucky runs because they don't know enough. So they're just going with it. They're just hoping, oh, things are just going to keep on going higher. And the market is on it. Overall, the market upside is still intact. Let me just be fair about that. We're going to look at that too. So, but every time the market dips a bit, they're like, oh, it's definitely going higher. So a couple of days they suffer a lot and boom, then the market goes higher. And they're convinced in their head, behavioral game theory, that the market can only go higher. And that is a very dangerous trait. But it's ignorance is bliss. So a lot of traders out there who don't understand the basics of what or technical analysis or whatever the case may be, and the less they know, the better off they are. But that's a dangerous way of living. Okay, so the point is that some traders out there are and even in our group who give two hoots about technical analysis. Yeah, they like my charts and stuff, but they don't really care about the technical analysis part. Are hitting some home runs here and there. Let me just put it this way. That's all fine and good. But they are. But when they get a little bit too euphoric, and people who have been with me know very well, I can be a raging bull off tactical lows at 1800 in S&P or 2140 in the S&P, but I refuse to be a raging bull when the markets are exhibiting signs of fatigue within an upside range. Now that's discipline. when it comes to the business of investing and the business of trading and the business of technical analysis, I am an old man because I've done this. I've learned the hard way. I've taught myself. I've succeeded very well, and I'm here. So my discipline does not have to be replicated by other people. In other words, they don't always have to be as disciplined as I am. They can go what the hell they want, because that's the purpose of the service. I'm supposed to be used as a tool, not used as a biblical prophet, right? So just remember that. So saying all that, do heed these patterns that are exhibiting what I'm explaining tonight, and I've explained before too, and be careful. That's all I'm saying. So saying all that, we have these are the bearish patterns, right? You have, here was another one, head, left shoulder, right shoulder, and failure. But once it gets down there, what does it do? Just the opposite. It creates an inverse head and shoulders. And that reminds me of another thing that I want to remind all of you fine ladies and gentlemen, that be flexible. Patterns are constantly changing within this whole trading band. So don't be rigid. You get this technical sell-off, you get those clueless trading perfect resets, you get the slow stochastics coming down to oversold levels. You want to be a buyer. Just the opposite. Fast stochastics, slow stochastics simultaneously. Overbought. Doesn't matter if the market pushes up a little bit. Doesn't matter if Google goes up another $3. It's going to fall 7 or 8 if you're not managing your own profits. Because the market is trading, the reason you're getting this type of volatility is purely because the institutional money, but more importantly, the hedge fund money, the fast money, is day trading. That's all they're doing. Because they got to make money, so they're day trading. And many of them are day trading like they were in the old days, like humans are, actual traders are trading. But a lot of the sophisticated ones are using algorithmic high-frequency trading programs. That's the reason why prices fluctuate so much, period. Of course, the fundamental backdrop of each of the companies and the news that comes out is important, but it's not as important. Because news, honestly speaking, and I'm straightforward. I'm unscripted, okay? I'm not reading off a script here or a teleprompter. They don't give a shit. All right, so they'll drop the market for no reason, especially the bigger, let's say like Renaissance Capital comes in and they dump 100,000 shares of Google. Just picking Google as an example. Boom, it'll drop $7 for no reason. And then that little news will come out. Oh, they got a little fine from the EU, who's always trying to find U.S. companies anyway. Apple got a fine, big deal. Did it really move it that much? Yeah, it moved it a little bit, and then it started going the other way. So saying all that, that's why volatility is happening. There's also volatility in the currency markets. There's also volatility in the bond markets, which are more dangerous stuff. Because the volatility in the currency markets has to be, and that is another day's topic. That's where the advanced coaching sessions really come in. Because the volatility in the currency markets are the ones which are the first canary in the coal mine. That something really bad might happen. Because when currencies break down against each other, which they're not, by the way, they're pretty correlated right now, then it's a disaster coming. But they're slower moving disaster. You know what I'm saying? They're not like a 5-minute type of thing. So saying all that, once the market falls, what does it create? An inverse head and shoulder. Head, left shoulder, right shoulder. Head, left shoulder, right shoulders. Complex, multiple right shoulders. Within these type of bands, there are more head and shoulders. If you really want to like squint your eye and take a look at it. There are dragon bullish formations, the W formations. See this? Perfect. There are consolidation channels. And then bang move ups. And then they have what do you call channel breakouts. This is a sideways consolidation channel and then a breakout. So all of a sudden when there's a breakout, the average amateur, I shouldn't say amateur, but the average retail trader who never wants to recalibrate their mental thinking, they think that what worked before will work now. It doesn't work like that, ladies and gentlemen. Go sit in a high-level calculus class Go sit in a class for take coding. Go sit somewhere where they teach you algorithmic, not trading, like actual algorithms, how they work. You'll understand why these machines do what they do. Little piece of information that many of you might not know. Algos don't give a care about what markets are doing. They're simply looking at price trends, momentum, and movements within the markets. That's it. You think they really care whether there's a, PE ratio? I'd laugh every time a trader says PE. Oh, the PE is too high on that. Okay, great. Why aren't you sitting there making 1.2 million, analyzing PE? So seriously. So, and I always remind people, when you look at a growth company, look at PEG, price to earnings divided by growth. If the PEG is less than 2, 2.5, 3, the stock is a buy. All right? So saying all that, it breaks out. This is where the traders get all excited. You feel the excitement. Here's a channel trading in. Okay. Now I'm just drawing a line through these head and shoulder the shoulder patterns. So here's your trading band, the 2184 level right there, where we hit major resistance all the time. I'm just going to draw this out right there. Perfect. Draw the bottom of the shoulders. Draw it like that. Pretty perfect. Okay, 2170, 2184. So it breaks out. Everyone's like super excited. Oh my God. What do? I'm positioning myself somewhere here, and I'm shooting fish in the barrel. It happened way too many times. And I monitor my room. I know exactly. Every trade is like a book, believe me. Okay? They're all getting super excited. Oh, this stock we're going to break out. We're going to hit 2200. Bullshit. We will hit 2200. But the technicals have to support it. Oh, it's okay. And bang, right there. Maybe they're away from the desk. Maybe they're, not looking at it because they're feeling a little too complacent. Look, we're all humans. We know sometimes when we feel good, we just like let it go a little bit, right? Bang, come back. And the market is like selling off like a monster. Well, I had issued big things, bank your large profits, trading profits, markets overbought, caution, all kinds of stuff that I do. Maybe I'm a day early sometimes. Maybe I'm a few hours early. I'm watching the rest of the crowd just dancing on the streets like a Jamaican festival in New York, okay? And guess what? They lose all their profits. It's happened way too many times with many of you. All right? So this is what goes on. And this is what the dance of the algos, as I call it. I'm not saying that they know exactly at what point, where the stops are, or they do know because they see it. Once you put a stop out there, it's visible to the machines. So, and then it goes. So that's what it's doing. Now, where are we right now? So what I'm saying is like here's another head, head and inverse head and shoulder, left shoulder, right shoulder, and go. So what am I doing? What I'm doing, as you all very know, and many of you are participating in, we're tactical trading. It's not just a term I just made up in my head. Okay? I'm not a politician here trying to run for office. I'm just trying to grow my trading book and helping you guys along with it. So saying all that, I'm tactical trading. So when I'm tactically trading, once my levels are reached, give or take within a few points, or surpasses it within a few points, what do? I get the heck out of Dodge on those particular tactical trades. I am not making long-term assumptions in the month of September yet. We're in the middle of nowhere right now with some very positive developments that have come out of this weekend's G20 meeting, in the sense that they have been extremely forceful on reiterating, and I put it out there on the Twitter feed, their policies on growth. The governments, not the central bankers. That's a good thing, because we know what the problem is. The problem is the Federal Reserve can't solve the nation's ills, whether it's here or whether it's in Europe or whether it's in Japan. Government has to step in and do what they have to do. Infrastructure spending, stuff like that, to boost the economy. Tax reform, corporate tax reform, very important. Look what happened to Apple. Got slammed by $1 gazillion And this was coming. This is not the, they were warned that they were going to get slammed. And some people might say they deserve it because, they don't pay taxes, this and that. Well, if you do some serious tax reform here, they wouldn't have to go through that. So anyway, that's each other's, everyone has their own perspective on it. But without corporate tax reform, companies are going to suffer because other nations are going to, especially the EU, they're going to go after their money. Do you think Apple's the first one? You might hear the news on Google tomorrow. Okay, companies which do large overseas business and pay very little in the countries that they are producing a significant amount of their goods, right? Or maybe a domicile there, even though they're a U.S. company. Both Republicans and Democrats have attacked tax inversions, as they call it, right? In a major way. So it seems to be a big political hot potato. It's very easy to explain in a speech. Oh, look at they're making U.S. money and then, going overseas, not paying taxes. Go get them. It's all populistic, jingoistic bullshit, in my opinion. Okay? There's a lot more complexity behind it. But it sounds easy for a guy who has no frigging idea what tax inversion means. Okay? So, but it gets the votes, right? Remember, an educated, they say an educated electorate is not always the best ones to vote to get the votes, because the more educated you get and the more knowledgeable you get about a particular topic, you start to see that it's not always black and white. It's a lot of gray. Same thing in life. So making simple comments sometimes is easier to get votes as well. So this tax inversion issue is a major issue. Whether it be Allergan or whether it be this, that, companies which have wide worldwide operations, which affect, companies that we're trading in. So saying all that, let's see what the markets in this week can do. All right. And then we're going to go into a couple of things, including looking at some good charts on gold, which I don't normally trade that much, but I think we're about to have a significant breakout for real economic reasons, and which is simply that the foreign governments and the U.S. don't seem to be that hell-bent on raising rates. So the U.S. dollar is not going to really spike up. So a weaker dollar is good for commodities. Real simple. And gold chart-wise is looking good. So looking at this picture here, let me just put it through. We have a significant double bottom. Here we get the black line. Okay, a significant double bottom, almost like a major double bottom and then a minor double bottom, right? We have a similar position here on the top. See how symmetrical it is. All right, you have a double top, these two, and then you have a minor double top. Look at that. Interesting, huh? And this is where we are. So from a perspective of tactical trading, you're looking at a very tight band that the market is trading in. The Bollinger is getting tighter and tighter. So here we have a very pinched Bollinger with the E-minis at around 2183. That means 2188 or so on the upside. We closed at almost 2180. So you're talking 8 to 10 points on the upside. That's roughly 60 Dow points. And those things happen so fast. Look what happens every day. It's just like, gotta get in there fast. You blink your eye, it's a different story. And we do really well with those type of trades, but you literally have to be stuck to the monitor. Or you gotta hope, and then the hope works out sometimes. Like how the market came back. But saying all that, we are in a very tight trading band, and that's always substantiated and validated by the shape of the Bollingers. The shape of the Bollingers can be interpreted in two ways. We have an upper move here, which it seems to be, a very complex, large dragon bullish formation. Look, like a really complex W. That's really what it is. And we get up towards here. We have a retest of this uptrend line that I drew earlier at around 2195, which means how much on the S&P 500 if the E-mini is around 2195 or 2196? Quick, somebody tell me. What is 2194 on the E-minis translated into the S&P 500, please?
Should it be the same?
No, I've said this a zillion times, Tim. You're the
It's the
E-minis
S&P
trader.
500. It's
S&P,
E-mini.
no, they're not the same, sir. You're a futures trader. You should know this. The difference, the difference between E-mini cash and S&P is roughly about 4 to 5 points. So when
Oh,
you
yeah, the evidence.
exactly, so 2194 is roughly around 2200 on the S&P 500. In other words, you add somewhere between 4 to 5 points, whatever the E-minis are. Okay, so
Okay.
so that's what it is. But what I'm surprised about is that the rest of the crowd who's sitting here, who have been with these coaching sessions a long time, and no one needs to be coached on that, didn't give me an answer. I'm a little bit disappointed on that, to be honest with you. Okay, because a lot of you should know that like the back of your hand from my video kind of stuff. So bottom line is that when we talk about E-minis, and we have to follow the futures chart, as we all know, you just simply in your head say, okay, 2194, 2195 is roughly around 2200 S&P. So back testing this downtrend line, this uptrend line brings us up to the infamous 2200, which seems to be the holy grail of where the market really wants to go. So this is where the bullish possibilities are when it comes to where the market wants to go, by simply looking at this pattern here, which can be translated in a bullish level. And somebody might say, well, if we break out over 2184, which again in S&P terms add 4 and 5 points to it, the E-minis, which comes to about 2190. So if we break out over 2190, we're going straight to 2100. Yes, technically speaking, yes. But what about here? We basically hit around 2192 on the S&P, and bang, they hit the market hard. But pattern-wise, this is very feasible. This could happen this week. It's very feasible. All right. Now, just because something breaks down, I want to be very clear about this, because many of you still haven't gotten out of that old habit, and I don't blame anyone because habits are tough to shed, okay, of this terrible habit of thinking that every breakdown or breakout is a valid one. Am I not true that that many of you still believe that a technical breakout above a certain price will take you there? Well, it does. I have news for you. It doesn't work like that anymore, because these machines know exactly what the traders are doing. They know they're buying those breakouts, and the minute they buy those breakouts, they slam them. Just the way it happened here, 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 and just the way it happened here, where it looked like we were finally going to break out of this band here. Now, in order to navigate these price patterns, you have to follow the internals. It's really as simple as that. There's no two ways about it. If the internals are severely overbought, there is not going to be a breakout. Okay, so the point is that this notion that many of you have, and I'm not here to change anybody's idea about what they look at the markets. I'm just simply preferring and offering my view, is there are so many multiple false breakdowns and false breakouts that you have to be aware of what the internals are doing, which is not showing on this chart, but all my other charts show it, especially my quad charts and those recordings that I put out there. Those internals are gold. I have made significant amounts of money just playing that. And I know a few select members who are making so much money that you guys would choke just by trading those charts. And I'm being dead serious here. Okay, we have a strict policy of not showing off with how much money somebody's making. Sometimes I'll share in confidence with some people here and there on one or two of my trades, but in general, we don't talk about that stuff. And I'll tell you, those guys are just killing it. And they're just simply doing it by trading the internals and playing with it. So just by looking at what I'm getting at, just by looking at price patterns, you're not going to get anywhere. Period. So just be careful about that. Just trying to help you out. Okay. So saying all that, in a perfect world, we would break out of this level and we go straight here. Now, what happens out here? We don't know. If the market really wants to break higher, then we are going higher above this particular uptrend line, which we are going to look at right now. Bear with me. And we're just going to go enter a new phase. So somebody says, well, what's a new phase? A new phase would be, let's look at the daily of the market, which I think might come after a pullback. So so the new phase would dictate that upper end of the Bollinger here. One second, which is well, we already saw that one. So if you look at this, particular picture of where the market can trade within, we already talked about it. The band is here. The new phase would basically be a phase above the 2200 level, and that would be a different ball game. Now, can that happen? Sure, it can happen. Sure, it can happen. You know, there are many sectors like the biotech sector which are still kind of compressed and can easily, you know, break out. The breakout level in the biotech sector is somewhere between around 320 or so. I will look at one of those charts, and it can certainly happen. So let's leave this here and take a look at something that could be a little bit more clear. Plugin has crashed. I hit this thing. Okay, so sometimes I show, bear with me one second. Sometimes I show these line charts just because I just want to show something different and something that is much easier to look at. And so lately I've been showing some people these line charts, which are, if any of you are computer guys, I'll tell you this. What's it called, Silverlight, that Microsoft uses, is extremely it's just, you know, just mind-bogglingly, unbelievably stupid. One second, I'm like stuck on that Microsoft thing right now. And this freestockcharts.com, Warden uses Silverlight and constantly keeps on jamming. So when I'm doing the sessions and stuff, you know, it becomes extremely frustrating. So just bear with me. I'm going to basically try to just focus on this now, not waste anyone's time. So here we have a chart of the S&P 500. Okay, no E-minis, nothing. S&P 500. Technically speaking, looking at the pure and simple fast stochastics, not the slow stochastic, fast stochastics, the simple explanation is it is not overbought yet. You can clearly see that it wants to go above the blue line here, which is over 80. As you know, stochastics has the second derivative of the relative strength index, the RSI, which many traders use to trade. And if it gets into the overbought zone, it generally tends to correct. If it's the daily chart, it tends to correct over a couple of days. If it's a 1 hour chart, it will literally correct in half an hour sometimes. You know, you guys all know that, depending on the speed of the market. I use the Darvas box as a great tool. These lines I've drawn, right, to show the band. Here is the Darvas box. It's very pinched. Higher end of the Darvas box is roughly 2188. Lower end is 2156. So we are 2157. Somebody please mute their mic. So we have 31 points, okay? 31 points on the S&P. Each S&P point is roughly 6 Dow points. You're talking about roughly 180 to 200 points that the market is traveling in. If this Darvas breaks out to the upside and breaks out over the highs, then we have a fair shot, based on my estimation, to test the underbelly or maybe even go to 2236 on the S&P 500. And believe me, it can happen. Believe me, it can happen. You know, oil is already rallying after hours, and oil could very well get up there. I mean, oil could go to $52, and it'll take the market for a 400-point ride, 500-point ride. So the point is that this is a rising wedge. You see this line here? Let me take this line out for now. Bingo. Focus on this. This is a rising wedge right there. Upper end of the rising wedge is roughly, look on the right-hand side, 2236. Bullish, real bullish scenario. Market, let's say somebody's extremely bullish, says, okay, now I gotta change the pen color to yellow. Perfect. So they could say, you know what, we're getting up here, testing the upper end of the rising wedge, which is in this zone. And that's fully doable. That's a technical move, a real big technical move. It can certainly happen. Now, on the lower end, and that's why I use all these different, the Darvas box or the moving averages, whatever the case may be. It was bullish on Friday when the market basically, this was what day? 9/1. What day was 9/1? First of 9/1 was Thursday, right? Yeah. So this reversal on Thursday, this is it. This is a, you know, serious hammer reversal. Look at that. Long tail, head, hammer reversal, which continues in the form of a green doji. Good stuff. This is good. Upper end of that, you can look at these blue lines are, this blue line and this blue line is, let me take these lines out so you guys can all see it. We're look at how pinched this Bollinger is. We're gonna get a big fat upside move this week, and from the looks of this chart, it's going to be on the upside. I'll explain to you some very critical dates where the markets will have some turnovers, okay? But looking at this pinch Bollinger, this one right there, looking at the internals on the daily, pointing up, you are going to see, expect to see that there's a good possibility of an upside break of this upper Darvas of 2188 and then above 2191, and over 2191, just mentally the market wants to gravitate towards 2200. It's really as simple as that. Now, this was the consolidation move that the market was doing. So I drew a consolidation channel. Oh, the other thing the market did, which was very positive, you guys can see that, it stayed above the 50 moving average, the red line. It came close to it, right? But not close enough. It came close to it by 4 points, right there. Right there. Let me highlight this. See how close it came to it. There's your 50 moving average. And then it just bounced hard. And it closed on Friday above the 34-day moving average. Very, very good. We'll take it. Very, very good. Now, this is the large consolidation channel that I drew. And it is very, and look what the market did. And this is how precise these drawings are. This consolidation channel was drawn on these 3 days of pullbacks, right? And look what the market did. It came and touched and retested the downtrend line, what I call the DT line, exactly to the teeth at around 2157. If it had broken that, we would have a fair shot to come down to about 2140. And everybody out there would be freaking out. Oh my God, you know, this is the beginning of the big one. It would be nothing. It would simply be a pullback into the consolidation channel. And I can assure you there would be a 90% probability that the market at that point would be so deeply oversold that they would have a physical bounce to capture back the 50-day moving average. Remember one thing. Rule number one. Once you break the 50-day moving average, you hear every single negative bear out there who screams and shouts like this is the beginning of the end. Yes or no? Always. Always they do that. What does the market do? Okay, the market, when it loses its 50-day moving average, fights like a madman to go ahead and reclaim that back. Always. So that reclamation of the 50-day moving average is worth some very decent money. Now, it doesn't matter what those fundamentals out there are. Once the market loses its 50-day moving average, like it did during Brexit here, okay, many of you might have forgotten what Brexit is. Just kidding. So it wanted it back. Now, whether or not it would continue above the 50 moving average, that was still an unknown. Yet, I did say that despite Brexit, and it was clear on my charts, and I said it on my video cast, despite Brexit, Look what the moving averages were doing. Can somebody tell me what the moving averages were doing when we lost 920 points in 2 days and the world thought that it were going to end and we were tactically watching? I will be very fair in saying that I expected a little bit more downside, like about 100 Dow points or so, more like towards the 1980 level. It didn't go there. We had a hammer reversal, which is shown on the hourly, not here, and then see you later. The 3-candle move that I said was the biggest signal to buy the crap out of the market within reason. Because you get these 3-candle move, I repeat again, go spend your time listening to my stuff because I'm not going to repeat it. That's trillions of dollars shorts being covered. And if you don't respect a 3-candle move, well, you have something going on. I can't explain. This type of 3-candle move is almost never reversed. There is always a follow through to the upside. Ladies and gentlemen, that's the follow through of this seismic earthquake of short covering by the largest investors in the world, including Stanley Druckenmiller, including George Soros, including our good old idiotic Bill Gross, okay, and Carl Icahn, who's probably going to be, shorting and talking till he's 90, 110 years old. He talks so much crap, it's not even funny. But he's smart and he's got money. You know what they say in life and in business, money talks and shit walks. When you got money, world will listen to you. When you're poor and you don't have money, nobody gives a shit. Don't forget that as a trader. I don't care how smart you are. If you don't have money, no one cares. Remember that. So the guys with real money were covering here because right before that, for months and months, they were losing money. They were shorting the market. Bill Gross came out and said, oh my God, what the hell is he saying about the universe and crap like that? Carl Icahn's like, oh my God, I feel this whole world is going to end because I'm going to be 94 and, maybe, what the garbage they were talking about, seriously. A lot of garbage was talked about. Some of them real, of course, but they're talking their book. George Soros, he's like another guy. He's like 90 years old, decides to come back and manage another 30 billion. I mean, Jesus, good for him. Okay. Money talks and, excuse my French, shit walks, right? Never forget that. So the point is that these guys covered. So this is George Soros. This is, imagine their faces, if you know who they are, Stanley Druckenmiller, Bill Gross, Carl Icahn, whatever the case may be. This has happened. Now, question I want to ask you all, because you have to answer this. This 900, almost 1,000 point drop in the market, what happened to the moving averages, the ones that I obviously give a lot of power to, which is the orange line here and the red line. What happened during that period?
When the market fell, they curled downward.
They did not.
And as the market came back, they curled slightly down.
Not really. Here's the answer. Yeah, slightly down, but not to the extent they should have. But here's the answer, because none of you other guys. Does anyone have any other answer? What is the? If you just quickly glanced at this chart, what did the moving averages do here during the 1,000 point drop during Brexit?
Nothing. Haven't changed much.
Thank you. Thank you. Tim said it. Michael, you want to say anything? For like the first glance view, what did it do?
They flattened out.
Huh? I'm not asking you, Tim. You already answered. Somebody else give me an answer.
No, I said they flattened out. This is Lamont.
Yeah, there you go. So without harping on it too much, as a visual trader, they did actually nothing. Yeah, Corey's right. If you really look at it, they moved a little. Of course they should move a little bit. They dropped 1,000 points. But the point is that they did nothing. And I did say that when you see this type of movement, that's telling you technically nothing changed. Technically nothing changed. Yes, they kind of bent a little bit, What did the world feel? The world felt that there was a seismic earthquake like 11.2 magnitude, and that everything was going to end. We all felt that. It's only natural. But what did the technicals tell you? They got deep oversold, right there. Look at that. Whoa. That's deep oversold. Where you get a histogram reading. Let me show you this. And I talked about this. Whoa, minus 200. You get a minus 200 on the histogram readings on your thing during these big inflection times in the market. You better buy like with hands down next time. Minus 200, minus 300 is like the market's going to have a dead cat bounce or a real bounce, because this was a dead cat bounce when it started. Let's face facts. But what's a dead cat bounce? I hate saying this. We have 3 beautiful cats and 2 dogs. And last I knew, I don't know, thank God none of my cats, none of them really bounce when they fall, do they? I mean, do cats bounce when they fall? I don't know whoever came up with that. Maybe a real cat hater. So the point is that nothing really happened. But the oscillators and the internals and the stochastics, like, whoa, minus 200, minus 300, it's like, forget it. You always have to buy. Within 24 to 48 hours, there is going to be a vicious bounce. Sell the bounce. But of course, this bounce continued. To make a long story short, what is happening to the, and these are observations that are important. What is happening to the moving averages now? And this is a question, you guys are all very intelligent. I know that, okay? So think and answer. So the moving averages right now, and I'm going to basically hide all drawings. So it's a clean chart. What are the moving averages doing right now?
Moving up.
That's not the real answer. This was
They're sort of they're flattening out, aren't they?
That's one answer, but here's what answer I'm looking for, in order to explain this. What would when this moving averages were inclining higher here also, right? 1 second, let me clean out. Here they were also, they were starting to edge up. But what's the difference between the moving averages till about here?
Oh, the 34 is way ahead of the 50.
Right. So what's happening is there is a divergence being built up. A divergence being built up. Correct, Tim. Look at, I have very seldom seen this. Okay? Because we can go back to the weekly. I'm sorry. Let's go back to the daily and earlier. Very seldom. Not seldom. I mean, we have seen this here. They start to diverge. Right? So once they start to diverge, what happens? Here is the possibilities. Okay, it's actually a very positive move. Just so you all know that. All right. Once you have the moving averages diverge, at one point, this red line, which is the 50-day moving average, has to continue moving forward because the 34-day moving average is dragging it higher. Is everyone clear on that?
Yes.
Okay. It's a positive move. Now that's for a sort of swing perspective. It's a very positive move because you don't want them to be diverging down. You're diverging up. But here is where predictive analytic comes in, and here you just have to keep this in the back of your head when you're trading, is as they're diverging, you are starting to see the prices move a little bit too far away from the 50-day moving average. Now, that's not necessarily bad. Here, prices moved away. The standard deviation, Tim understands this well, it was quite high from these levels, and it always reverts back to the mean. It always comes down and retests the 50-day moving average. So what I'm getting at is that short-term positive, we are in a position here where I believe that the market might, if it doesn't break out. This is one thing, remember, many sessions for these 2 years that I started the service, 2.5 years, when I've talked about these things, they've always happened. What I'm saying is this, the two possibilities, that we are going to, market must, at this point, make a decision to break out over that 2200 level, or in upper Bollinger is actually 2191, not 2200. That the market needs to break out of this band that it's traveling in. This is the band that the market's been traveling in for a while now. Okay, it needs to make a move up for the bulls. Okay, because if it doesn't make a sharp punch up, the bears are going to take control and move the market down towards the breakout level here, and I explained this in one of my charts. This was the multi-year breakout. That really powerful Texas Longhorn inverse head and shoulders. Seriously, it looks like a Texas Longhorn. Okay, right there. This was the breakout level, right? 21.25. If the market does not break out fast and furious over 2200, I will put money down, which I do every day, so that the market will come and test the breakout level of 2125. Ladies and gentlemen, if we lose 50 S&P points, that's roughly about a 400-point move on the Dow. Here's the best news ever. Do we give a shit about 400 points on the Dow? We care about 2,000 points on the Dow, correct? If we're going to break down. Now, here's the other good news. One of these top guys they brought on the other day, Indian gentleman. I've never heard. I actually did hear of him. He's some sort of guy who called like every crash right. Okay? Seriously. I don't know if you guys saw him. He was on CNBC or he was on Bloomberg. I can't remember because I switch in between both the channels. He said exactly the same thing, that we are going to see a substantial pullback, but the good news is that pullback is going to be somewhere between 400 to 600 points. Now, just because we both agree, does that mean that it's going to happen? No, but there's a very good probability of that happening. And in fact, I think it's the healthiest thing can happen to the market before it attempts to move forward into October. So a 400-point move on the Dow will bring us towards 18,000. 18,000 will be a fantastic, in my opinion, technically and psychologically powerful buy point in the market. If we lose 18,000, no big deal. We have a couple of reference points here that you guys might consider. One is the left shoulder here. I'm sorry, the right shoulder after Brexit. That's around 20. That's around 2075. Now, here is something else I'm going to tell you guys, which I've observed over the years. Some of you probably heard this from me before. Markets like to move in 100-point S&P bands. I can show you over and over again, give or take a few points. So 100 points from where we are today is down here, which also happens to be the right shoulder of the post-Brexit rally. Right there. See that? So even if we go to 2075, it's not the end of the world, even though it's going to feel like that. Because if we lose 100 S&P points, let's say in a fast move, and remember what I always say, the faster the sell-off, the better it is, always. The faster the sell-off, look at this, back in beginning of the year. We all forgot January was a terrible month. Not for us, but for the markets. Fast sell-off. This was a fast sell-off. Every time the sell-offs is fast and furious, and I'm not kidding, technicals, the panic, the capitulation, doing some tactical short trades, all pan out to be a great buying opportunity while you make money on the downside. Now, the downside money is more difficult to make, mind you. I've been there, I know it, is because the markets still are on a major uptrend. Am I clear on that? And that's the reason why shorts don't work that easily. How many times have the markets broken down, and if I'm a little, if people are a little bit late on that short, they lose money? Yes or no?
Yes.
Even though technically it looks perfect for another 100 points down. Boom, the market turned. And for those type of turns and technical tacticals, I use the quad algo HFT charts to save my butt, to go along immediately, and with all due apologies, Tim, they move so fast, so quick that I put all the levels out there, but I can't immediately alert because by the time I'm alerting, they're already moving, and it's very fast. But I will, with all due respect to you and stuff, and I do appreciate you being here, I will put more defined levels first thing in the morning, and I do, but I'll try to do it more, where you can at least say, okay, it got there, let's take a look at it, and if you're near a machine, it's easier to see. The other part, which is very easy to see, and I'm going to give you a real trick here, okay, is use the investing.com app on your iPhone. It is so good. and so easy. And I post off that time to time, right? You know, the white ones, you know, where I do that if I've like stepped off my desk, and my iPhone's always stuck to my hand, and my iPhone 6 Plus, you know, just I look at it. Investing.com is the best. You just move it horizontally, chart comes up, put Bollinger, put candles, all of a sudden the picture is clear. Whether or not there's a reversal candle, whether the market's breaking down, 5-minute, 15-minute interval, they seem to refresh that data very fast, so it's almost real time. So that's the trick. If you're off your desk, please use that. All right? Okay. Investing.com, everybody, please. Investing.com, download the app. It's free. Register for it, free. And you get the same beautiful view. And you can literally trade off those those charts. You get the same beautiful view like this, okay, on the 15-minute, where you can see. Oh man, what the hell happened? Hold on. 1 second. You can. Okay, that's better. Let me get these lines out. Okay, you honestly, like, you could actually trade off this is what it looks like on the iPhone screen. The bigger the screen, the better, obviously. So the thing is, you can actually see the reversals, you can see the tails, which are the key ingredients to make money if you're tactically trading. You know, you want to buy this for a reversal tail, and you want to buy the second candle that develops, and then you want to sell the third candle. That's the rule of the thumb. If you're doing like really fast, you know, it's like futures trading too. You want to buy the first candle, look to see how it's consolidating, and the second candle generally is where the shorts really get nervous. So you get this big move up. If you come into the third candle, the chances of you making money get trickier, because by the third candle, the guys like us who bought somewhere around here on the major candlestick reversal, you know, it's like a Chinese firecracker, right? It's reversal. We are going to be the ones who are selling here. So even though the market still wants to go higher, because these are good signs, by this time, if you bought here, let's say you bought some S&P calls at like $4, before you blink of an eye, they'll be like $3 or maybe $2. And you're like, what the hell? I'm down 50%, and I just bought a bunch of these things. And the fault is, unfortunately, that you didn't react fast enough on the earlier candles. So the profit takers will bring you down here. Now, what generally happens with traders is they will at that point exit the position. Because they're looking at like, oh, I'm down 40%, you know, I got to get out of here. In the meantime, internals are still climbing higher, and I show all that during the day quite often, as you know. And then the following day or the same day, the market takes off another 60, 100 points. And you're like, I can't believe this is happening to me. You know, you buy it, you sell it at a 30% loss, and then you see 100% just go up in the wind because you didn't hold on to that position. People ask me, what do I do on this? I said, very difficult. This is what you do. If you have more than one, for example, then you want to keep at least one or two, so that if the market really goes off, okay, like a firework, and it certainly does that, okay, then at least you made up what you lost and took in some profits. Not as much as you would have if you kept your original position, but I do realize as a trader that if you have a bulky position, it's not always fun to see that position down 50% before it takes off, because we don't know the future, right? So we don't know that it's going to take off. So that's why I focus so hard on the Quad Algo HFT platform and put those charts out there. Now I'm putting some videos as much as I can, so that I can use the mental discipline, the technical discipline, and sticking with the trade as long as the internals are climbing higher. Period. That's really as simple as that. As long as the internals are climbing higher and not overbought. Now, I know in volatile markets, internals can be up here and then all of a sudden crash. I mean, that's a different story. But aside from that, almost 70% of the time, if the internals are climbing higher, that's telling you pretty much that other than fast money, the so-called heavy money, the swing traders are holding on to their positions, and the buying pressure is still on. So that's really the only trick. You got to follow the internals, whether it be the fast or the slow. Now, you know the difference between the fast stochastics, this is fast obviously, and the slow stochastics that I show very clearly on the Quad platform, is that the slow stochastics keeps you in the game. The fast stochastics is like a wild night out in the city. Okay. Imagine imagine all of you are 20-some-year-old, making serious money, and you go out in the city. That's a wild night in the city is a fast stochastic. If you want to look for a wife, that's a swing trading. Okay, that's your slow slow stochastics. Us married guys, we know that. Okay, it's a slow stochastic. You have a beautiful evening. You have a beautiful wife. You might not be happy all the time. Little fights here and there, but you know what? It's swing trading. You stick with that, and it makes you the most money. Just serious, all right? So that's a married guy technical explanation. But aside from that, fast stochastics are the ones which really make you jump back and forth. So now I'm gonna show you why I'm. Tim asked me this question the other day whether I'm long gold. Yes, I am. I'm not a gold player. I like to play gold in the form of Nugget, NUGT, or JNUG. Those are the two that I play, generally speaking, okay? Because what I like most also is Nugget, NUGT, which is the 3 times gold miners, and JNUG, which is another like monkey on a hot tin roof, real movers, okay? They have split. Whoopee! They're no longer, $170, $180. Corey remembers, I called it and it went up like $12, whatever. But I just, I just couldn't bring myself. I like to buy a bunch of the common too, not just options. So this is the gold miner 3 times shares. All you need, ladies and gentlemen. I'll put myself on the line like I do every day. I'm very bullish on this chart. I think we can make some serious money on it. Okay? Now, this is the daily chart. I realize we have a negative crossover on the 34 crossing over the 50. I do realize that. However, I am not looking to marry NUGT, which is right now around $20, $21. It splits 10 to 1. Can you believe that? Not 10 to 1. I think it split. I just saw it on my screen. No, it didn't. It wasn't $300. No. It split 7 to 1. Or 8 to 1. Yeah, because I used to trade it. It was on 160, 170. It went to 200. Somewhere around there. Could be right. But whatever the case, it split. It's much more affordable, and it moves. That's all the 3 ingredients we need in a trade. Okay? We don't need I've sat on options on some biotech stocks. The stock's up like $4, and the options don't do anything. And it's just very frustrating, right? And then they do it. But, but in this case, they move. And I like that. In other words, what we say is the elasticity of the correlation, of movement within the stock and the option price is very good, right? So let's take a look at the chart. This is the only negative I can find on it, that the 34 has crossed over the 50. But that's more on a swing basis. And I'm not looking to marry this, all right? But here are the positives on the daily. Look at the volume surge going on. Back to back, Thursday and Friday. I like it. I also like the fact that the retracement has brought the stock down. I'm treating it as a stock, obviously, all the way down into a double bottom formation. I love double bottoms. Okay, this is a double bottom formation with a very nice move up. That is at one point going to get overbought. Now, is it going to be a straight line up? It's never like that. It's going to zigzag a little bit, a little down, but it is going to get here. That is the technical basis. Very easy. Now, third thing. Let's take a look at the histograms. McClellan oscillator. McClellan oscillator also is now very oversold. I like buying oscillators down minus 100 on the daily. I have very seldom been wrong buying oscillators that deeply oversold with the stochastics on a positive double bottom curvature up. That's a plus. And then you have this fantastic. The last time it got here, where the McClellan oscillator slipped to minus 150 here, was when good old Nugget was at the same price. So give or take, we have, in fact, a positive divergence. We're at the same price, but the oscillators are actually better. Every time the oscillators get below negative 100, every time, ladies and gentlemen, it rallies, just like a stock. Third thing, these are the same old rules which apply to any trading, okay? This is cooperating with me, we're oversold. Everyone understand that, right? So we're not buying an overpriced position, we're buying an oversold position. That's what we want to do. We want to be smart to buying oversold position. Third thing, look at the standard deviation from the 50 and the 34 to where it went to the other day, which was 17. Look at this candle formation, the first fat candle. You gotta buy it. Now, does it not mean that it's gold after all? So it won't move like a stock, is it? Doesn't mean it can create a big fat red candle here? Sure it can. I'm just going with the probability of making money off where we are right now. I am an expert at reading pattern symmetry. Can somebody tell me what this pattern reminds them of? Can somebody tell me like where you see it? Most immediately where this pattern is replicated here. Also replicated here. And now here. So every single time it's done that, what's been the standard move? The standard move has been roughly, in this case, it went from 14 to 22. Not bad. That's 60%, right? Yeah, roughly around 60%. So from here, if you do 60%, that's a lot. Let's say 50%. That's a lot too. But whichever the case, I am looking for it to move up towards this big fat gap. Everyone see this gap here? Right there? This gap at 26. That's where I'm going to go. I want to take this baby from 21.51 to 26. Options are cheap. They're $1.20, $1.30, $1.40. They're going to be $4 or $5. And gold moves. Gold is nicely up by about $4.50 right now as we speak. Gold futures are up 4. And we'll look at the gold futures in a second. So I like this trade a lot. Now, what is the fund economic basis behind that?
Wait, Frank.
Yes.
Can you go over your look on 21 and 21.5 spread? Why do you buy so narrow spread?
No, I'm actually not necessarily buying the spread. That's a very good question. I'm just giving people a basic idea of constructing their own option strategy based on the strikes that I like. That's why. They're not,
okay.
they're not spread. I understand what you're saying. They are not actual spreads. They're actual strike prices that I like as a straight out binary play. You get it?
Okay.
Now you can, yeah, right. If I was doing a spread, why do you want to do a spread for 50 cents, right? You want to do a spread,
right.
wider spread. Absolutely. I have always said that people need to construct their own options trades. Some of them are more, we have a lot of people, yourself included, who are more sophisticated options traders. You might want to do a spread. You might want to do this. I'm purely looking at the simplistic way of saying, okay, I like these strikes, which are at the money, in the money, at the money, and I think they'll work very well. So that's what
I misunderstand you.
No problem. I'm glad that you asked that question. Yeah, because if I was doing a spread that tight, I'm like, it doesn't make any sense, you know?
Right.
Exactly. Now, let's take a look at, so the backdrop of this, the macroeconomic backdrop is that no central bank out there really is in any rush to really cut back on QE. We are not even, we're kind of like, are we going to raise rates in September, not to raise in September? In other words, we're not expecting a very sharp spike on the dollar, which means commodities in general, which sold off nicely lately, are going to recover. Now, that's the bigger picture. I'm not looking to, like I said, marry this thing from a tactical perspective. It's a great trade. So let's look at gold, which is the underlying asset for Nugget. Is everyone with me so far?
Yes.
Okay. And very good. We have, let me see. Okay. Now, let's take a look at gold here. All right. I'm not a gold bug, whatever, but I like to play gold once at a tactical level. These are the tactical levels that I like gold. 1, 2, 3, What's the commonality between them? They are all bouncing off a major uptrend line from last December. Period. Okay, so looking at this picture here, this was this line is to me picture perfect. It touched all the right bottoms, and this is where we are. And guess, and if I remove this distraction here, take this, make this line really thick, you guys can all see it yourself. Gold is on an uptrend. If you look at gold, well, gold has a minor crossover just like nugget right here, okay, if we really squint our eye and see it. But then at the same time, same story, wanting to get overbought, same story, it's still oversold on the histograms. No, actually it's not. It's at -8. It was at minus on Thursday. It was at minus 109. See that? So it's moving nicely. It's starting to go positive. Gold histogram, a McLaren oscillator goes positive. What do you think is going to happen to NUGT? It's going to move fast. Going to move fast. On Friday, it was up to and change. We came in the middle, so we were up a bit. And you have to scale in. You can't lump in all at the same price. You know, you got to scale in within a range. Whatever the case, this to me tells me gold wants to go to the upper Bollinger at around 1346. Now remember, these are gold futures. Okay, 1346, and we are at 1330 right now. That's 16 points. And once it goes to 1336, it's above the 50-day moving average. Gold lost this 50-day moving average on the 24th of August. Here. All right. So what did I explain earlier on in the video cast? Anytime a stock or an asset class or an indices loses 50-day moving average, first time, it wants to go and reclaim it back. I believe gold will reclaim its 50-day moving average, which is still, the trajectory is still pointing higher, over 1340 within the next 48 hours, 72 hours, whatever, and then go up to the upper Bollinger, possibly to 1364. Remember, gold's all-time, this is what it's doing. Look. To me, I think gold breaks out over 1360. So somebody says, wow, that's crazy. Gold breaks out 1360. What's going to happen? It's going to 1400. It's really as simple. I'm not kidding around. It's going to go to 1400. Look at every single time it's bounced off this extremely powerful uptrend line. And look what gold has done. And remember, I'm not a gold bug, okay? I'm not like, out there saying that everyone just, go hide in a cave like 90 feet deep and buy gold and drink beer all day. I say stay above the cave, make money, and drink beer all day. All right, just kidding. So saying all that, let's take a look at the weekly chart on gold. And remember, this is directly tied in with NUGT. Weekly chart of gold. Wow. Let's draw this right in front of you guys. Because I don't follow gold, I didn't realize how much it sold off. Wow. Does anyone see what's going on here? This is pretty big. So this is going to be another asset class we will be trading very actively under the current circumstances. Okay? Given the backdrop of what's happening globally. Look at that. If I draw this and get into drawing it the way I draw my charts, let's say I do this. Nope. This is better. You got an upside target of 1560. That's almost 200 points or 170 points from here. One way or the other, ladies and gentlemen, this on a weekly chart, on a swing trade basis, okay, which make the most money in many cases, we are looking at right here, the last, I'm looking for some major points where gold basically lost its shirt, for a better choice of words. Let's do this. Let's do this. There. Okay? That is 1440. So unless it breaks down completely and has a rounded, it does this, for example, unless gold does this at this point and falls below the 34 and the 50, okay, or falls below 1270, falls below 1216, it is rising higher. So from this point where we are right now, 1331 to 14, what did I say it was? 1434. You're talking about $100. And I think that's where it's going to find a major resistance like it did here. So you got $100 in gold, you got nugget to play with. You tell me how much money you're going to make. A lot. Remember, it's a 3 times bull ETF. So those are my reasons of being bullish on it. And even I showed you all the time frames. Now, one other thing that I do want to draw, and then I'll answer any questions on any other quick things that you guys have. 1 second. Beautiful. Okay. Let's extend it to the right. Look what else is going on here, ladies and gentlemen. Ready? Anyone spot it? Look, what did gold do? It's actually staying above the major downtrend line from all the way back of 2013. That's pretty significant. Look at this. Daily, weekly. Look carefully. From the top of gold, which was $1,900, you are starting to see a beautiful, large cup formation shape up. This particular cup, I'm using this as a reference point, 100 points from here. This particular cup, which obviously has a lot of zigzags, but this particular cup will get up here and then create a handle. That handle will bring gold down again towards 1300 before it decides to do whatever it wants to do. Whether it's going to go to 1700 or whether it's going to fall towards 1100, we don't know. But one way or the other, at least we got 1400 on the table. Now, this huge downtrend line from 2012, this red line, ladies and gentlemen, look where we closed at. This is my reference point, one step at a time. Look where we're constantly closing at. All rising trend lines. This is the mid-Bollinger. The Bollinger, simple. The Bollinger has changed shape. Instead of sloping down, now it's galloping up. Lower Bollinger, upper Bollinger. Nice movement on the 34 and the 50. Here's your crossover. One of the key things that I always teach people, not teach, I'm going to tell them straight out. Anytime you see a major crossover on a weekly, whether it's a stock or an indices or an asset like gold, commodity like gold or oil, whenever you see a crossover of the 34 and the 50, money down that it's on a weekly swing higher. Period. Now, in between, it'll zigzag, it'll pull back a little bit, come to the lower channel, maybe kiss the 34-day moving average. Everyone's like, oh my God, what's going on? But as long as this crossover stays intact, that means that over the next couple of months, over the next couple of weeks, this particular price will go higher. That's just the way it works. Once you have a 34.50 crossover, which happened, by the way, at around $1,200, you can see that. In between, gold had many zigzags, right? But trending higher. I think we have a very, very powerful situation developing here. The other thing that some of you guys might notice, and I'm going to ask each of you, what is happening here with the Darvas box?
It's getting pinched.
Exactly. What happens when you have a pinched Bollinger or a pinched Jarvis? I mean, that frigging thing is so pinched, it looks like a frigging, it's like, a little, it's like a bottle you can't even squeeze out of. So based on what we are seeing here on the internals, based on what I showed you on the daily McClellan oscillators and the histograms, based on the volume that's coming in, this baby should, high probability, make a substantial move higher, because you don't get pinched Bollingers and pinched Darvis this small, period. And on top of that, you got a reversal candle here. There's a lot of stuff going on. And it's on top of the large downtrend line from 2012. And I gave you the fundamental backdrop behind it. Central banks and the easy monetary policies, they still seem to be like, yeah, do it. And after the G20, if you read the bits and pieces that have come out, they're pretty stringent on keeping monetary policy loose till the economy starts to pick up. That's it. I'll answer a few questions and we'll wrap this up because yeah, go ahead.
Do you have any thoughts? On UVXY you were talking about last week?
Yes, of course. So here's UVX. You can't even see it. So it's actually easier to show on the stupid chart, that the free stocks that I'm reloading on the upside. 1 second. Volatility is getting compressed, Corey, all right? It is getting compressed to the point where it's becoming a little laughable. So I believe, based on what I see on a technical basis, UVXY is much easier to see on this thing, okay? The chart here looks bad. Now, this is a 15-minute chart. So forget 15-minute chart. You want to know what the UVXY is going to do, let's say, thing. It is so compressed that you need a microscope to see the daily. So I'll move to the hourly. So the hourly UVX right now is like a straight line, you know, like kamikaze dive, right? However, what you're seeing here on the 1 hour is again, it's like 5. You can't go any lower than that on the internal stochastics. So somewhere between 18, maximum 17 and a half, you are going to see a dead cat bounce, a reflex bounce, period. This is the Bollinger, okay? This is the Bollinger on the UVX. And the lower end of the Bollinger, Corey, is $18. So if we can catch this baby, let's say somewhere between 17 and a half and 18, you're going to see a pretty substantial bounce, which in my opinion will at this point, which was starting to move up nicely, mind you, okay? At this point, will at least hit the upper end of the gap. So UVS on a structural basis is obviously, remember, UVXY doesn't, the chart patterns are not the same as a chart because it's a derivative, right? It's a derivative of the VIX. So that's why the chart patterns cannot be translated the same way as a regular stock. But here's your simple answer. What I'd like to answer to myself in a simple basis is the only way we can look at the UVXY right now is the hourly. And the hourly, it has completely dropped off. It just dropped off. When something drops off like this on heavy volume, which it certainly did, that's pretty heavy volume, it is going to bounce. Now, whether that bounce is going to come by Tuesday or by the end of the week, we don't know. But it is going to bounce and get back within this channel that it was trading in, which was 19 and 22. My opinion, if we get a nice sizable pullback in the market, it doesn't have to be sizable, maybe 200 points. You know, we need a little breathing out, right? UVXY will go up to about 22. So that's your straightforward answer. Deeply oversold, not, you know, right now, the way one plays UVXY is they buy, they bite the bullet a little bit, they buy a little bit more, they keep on nibbling till bang. You get one of those shooting the fish barrel type of day where you'll be just sitting there going, beautiful. I have a beautiful average cost and now I'm going to sell. That's what's going to happen with the UVXY. All right? It's getting a little too cheap, too fast, and it's going to bounce. And that's going to be the mini correction in the market. Second question. Anyone?
So what do you think about CMG and Tesla and PCLN?
Okay, Tesla's getting PCLN. I don't even trade that much these days, you know. But let me explain to you about. I'll start with CMG. CMG is. I thought it was here. 1 second. CMG is building a very nice base. It's building a very nice base, and And so I would be, let me just bring it up. CMG is you can trade it on a tactical basis short term, or you can swing it, but I think it's good to go. See, this is a nice chart of the S&P. You know, look what it does. Like this, I was watching this. You know, I'd drawn this channel. Market came down, held above the channel. It's like so many different ways of looking at the same thing. But let's take a look at Chipotle. Where's our baby? Didn't I just pass it? I just saw it.
It's over to the left. I see it. It's
You
right
see
by
it?
Tesla.
There you
Keep
go.
going.
Yeah.
See
There
it.
you go. Okay, there you go. So here's a very nice representation of Chipotle. All right, from a standpoint of a big representation. Here's Chipotle when everyone's in love with it, $700. Here's exactly 50% haircut, 380, 380, right? 760. Coincidence? No. Mathematical Fibonacci. All right. That's actually exactly half. It's been cut by exactly half at 380, right? 380 times 2 is 760. Let's take a close up on what it's doing. If I look at it daily and simply analyze it like a stock, on a short-term basis, the stock made a big run. The stock has made a big run. The stock has gone, like when I pointed it out, from this level, from 387, let's call it 387, up to 425. That's a $38 move. Okay, so when you're looking at it the daily, everything got overbought. Boom. So right now, it's now creating some bad candles. These are bad candles. Nothing horrible, bad candles. Now, saying all that, CMG's trading pattern is not Google. It's not Tesla. It moves kind of in a more swing fashion, right? So saying all that, I would be a very willing buyer of the stock if it comes down, and this long trend line that goes from 760 down, I'll be a very willing buyer if it breaks below 400. If it comes down here, I'll buy with hands down. In that case, you got a beautiful multiple bottom. So in the case of CMG, do I see any immediate catalyst? Yeah, you know, the stock moves $4 or $5, but it's a question of like, what do you want to risk with $4 or $5? You know, if you look at the 1 hour chart, yes, it's oversold. Yes, it can get to the upper end of the thing. You can trade the stock on a tactical basis all day long. But as in a swing basis, the stock did a $40 run and need a little breathing room. So that's my statement on CMG.
Okay.
Okay. Now, in the case of Tesla, now Tesla obviously hurt because I didn't have a huge position, but I was buying, and it hurt. And in the meantime, hurt or not, as a trader, there were lots of other wins on different fronts. So let's take a good look at what's going on and keep our heads, you know, straight. So here is a very defined chart. A defined chart. A child will answer. Said, where do you think we should buy this? Well, if you look at it, it's like those little puzzles, right? When you're like 6, 7 years old, they give you like, okay, join the dots. Well, let's join the dots. 1, 1. We're almost there. 7 points. We're almost there. Do I think it's going to break 190 and crash all the way to 140? I don't think so. Now, why do I? There's a myriad of reasons why I don't think so. And I don't care about Tesla, like I've said. I like to trade it as a stock. Do I want to short it very aggressively out here? I would. If it wasn't 24% shorted, the stock can turn around and go up $7 on nothing because it's so heavily shorted. So I don't like shorting heavily shorted stocks, even though technically speaking, the stock is doing this. I remember very clearly when the stock was at 185 back in June of this year, warning people, don't get too crazy. People were telling me, oh, the stock is going to $100, this and that. Members, I said, don't do that because technically we got very deep oversold conditions. Things are very, very negative, and the stock just decided to get up and start running like a monster. It's the same situation developing right now, where the negativity in Tesla is so deep, so thick, that you want to take the other position. So saying all that, what is the probability of the stock hitting 185, 190? pretty damn good probability. But here's the thing that I always follow in life. If everybody's looking at the same thing, it doesn't happen. From the idiots on CNBC to traders on stock twits, everyone's saying the same thing. No, the stock's going to go to 180, 185. CNBC is always saying the stupid thing. Well, everybody knows that because it looks like it's going to go there. So is it going to go there? I don't know. Maybe it does this. Maybe it just decides to go like this and move up. Now, if it moves up, question is, where does it go? Well, the first line of major resistance comes at 215 because that is a major uptrend line that the stock broke here on the SpaceX blow up. Before the SpaceX, it actually had a reversal candle. In fact, the stock was up. And then, SpaceX. But that's more of a psychological thing. Between, if anybody really dissects it, SpaceX does nothing to damage their bottom line. It's just one rocket that blew up. It's not the end of the world. They have to pay $50 million to the guy whose payload blew up with the rocket. It's like a drug dealer. He paid somebody to carry all the drugs across the border, and the guy basically, I don't know, he got shot by the Border Patrol. So what happens? His whole drug cartel business is out of the business? No. He's going to find somebody else to do it. I'm serious, okay? That's the way you got to look at it. So the way I look at it is we are very close to a pretty significant, I think, quick, fast move. It's a very tactical trade. If you're not watching this and trading it very actively, don't trade Tesla, please. Tesla, if it does this, it can, mind you. It has to be done on some sort of positive news event based on the fact that they are nothing to do with the car itself, well, something to do with the car, but more important to do with the dilution of their shares because of their cash needs. Remember, Tesla's not going out of business. They got enough cash. And people, the ones who love Tesla, they'll sell all their cars to buy a Tesla. It's just the way it works. It's like Apple. It's a niche product, and nobody else comes close to it. Yeah, GM's making a Volt. Have you ever seen a Volt? Would you like to sit in a Volt? It's the ugliest looking car that mankind's ever made. And they're comparing it to a Tesla. I always laugh when analysts do that. Tesla is a Tesla. It's the Ferrari of electric vehicles. All right. So people who buy it and more people into it, and the cheaper models that they bring, as long as they keep up with the production, they're going to sell a shitload of that. All right. So Tesla, basically, from a technical standpoint, this would be the big buy zone. Will it go there? We have to watch. Is it a big short? I would love to, but I can't because I'm scared of the 24% short position on Tesla. Okay, everybody, the negativity is too thick. So if it does make a move up, the first level is to around 215, and that will be more of a swing trade. But in between, it's going to, obviously zigzag. If it does want to really change the trend, it's going to move like this, come here, maybe zigzag a little bit, break out there, 225, move a little bit in between this very powerful symmetrical triangle. You can see that, right? It's very clearly defined. And then it's just going to take off, which it was actually starting to do before it, this was a very, very positive pattern. This one. A very large head, a very large left shoulder, nice right shoulder, but then this happened from 225, right? We shorted the stock around here, and the short was great, except it would have been phenomenal if, if we'd held it all the way. I didn't know SpaceX was going to blow up. $1.50 calls went to 15. Now, this has happened 3 times, by the way. It happened with MELI. $1.40 calls went to 12 in 2 days. Mercado Libre, which is the Google of South America. I want to remind everyone, I pointed that out as a trade the minute Dilma Rousseff, the president of Brazil, got impeached, because the other guy, Tamar is his name, I believe, is a very market-friendly, pro-Western guy. And I knew the markets would love it, but I didn't know that JP Morgan was going to upgrade the stock the next day. Next thing you know, stock's up $16 from where I called it. The other thing happened with a very tactical trade on PNW, Palo Alto. I gave those weekly lottos at $1.30. They closed at 13. Please do the percentage yourselves. Okay, so these type of trades I'm constantly giving. Not all of them is going to work, but keep in mind that when I see reversals, and when I see in the case of MELI, a massive movement up from high levels. We made money on the earnings too. Mercado Libre, it was one of the earnings plays. Then it consolidated for 2 weeks, and then it created a candle. Then comes the news that Dilma Rousseff is gone. Now, do you think that the real smart players who own this stock, they don't know what's going on? So act on these things, you know, when I put these out. It doesn't, you know, it's not like rocket science, if you can. So saying all that, in the case of Tesla, this would be the bullish, this would be extremely powerful bullish movement. So this move here, if it does this, the stock's going to go to 250. I don't care what analyst tells me, whatever they tell me. If we can break this trend line and stay above it, so that would bring us into the 220, 225 range, you will see a monster move on Tesla. If it breaks below 185, in that case, in my opinion, it's a big short. It's a big short because all this is empty. Now, is it possible Tesla does this after doing all that and then completes the whole pattern at 140? Absolutely possible. Maybe they are in some serious cash crunch to the point that me and you don't know about. Everyone thinks they know everything. We actually, in the reality of things, know nothing, right? Think about it. Yeah, we know nothing. And traders like to believe they know everything. They're like super analysts. You go on StockTwits, they're like super analysts on things. Like, shut up. I mean, I don't say that. I'm very polite. And I'm there, you know. I'm like, be an empty vessel. Look at technicals. Look to see. Always acknowledge we know nothing. We know bits and pieces of public information. The key word is public. The public knows it. We don't know insider information. We don't play insider plays. So if we know public information, the other Joe knows that too. So they are doing the same thing. So remember that. Think outside the box sometimes. So saying all that, that's the picture on Tesla. We're going to watch very carefully what happens over the next 72 hours. Stock can be traded, in my opinion, back and forth on a tactical basis intraday. It could very easily jump $3 for no reason. If you catch the quick move, those calls can move from 2 to 3, 3.5, 4. You can scalp them out. It's a good trading stock. What the general direction is, I have no clue. Let's take a look at Priceline. And take all this lovely drawings out and take a look at Priceline. Priceline wants to go higher, period. This is a weekly chart. I'm giving you a swing perspective on Priceline. This is a weekly chart of Priceline. If you look at all these channels that were drawn way, way back, okay, the problem with Priceline is that I personally don't like buying calls $40 out unless it's really moving. So if I don't want to buy calls like $40 out or $30 out, it takes a big chunk of money to buy in the money calls like I like doing with some other stocks. Do you all understand that? It's like, you know, they're $14, $15, $25 a call. So what do? Buy one for a double? I mean, come on. That's the problem with Priceline. So what's the solution? Somebody call up Shatner and tell him to split the stock. Because if Priceline splits, the stock is going to be up $200 in 2 minutes. And believe me, they might split the stock. They split this baby, let's say 2 for 1 or 3 for 1 or 4 for 1. You know how many Joe Schmo mom and pop I mean, or even active investors will afford to buy Priceline? Many. Options will be cheaper. It'll be great for them. Now, will they do it or not? I have no idea. But looking at the overall weekly channel, upper end of the Bollinger and Priceline is 1500. Upper end of the channel is 1531. Lower end of it, where it seems to stick all the time, is around 1400. Round figures, 1400. Only negative that I see here is Priceline on the weekly is starting to get overbought. You can see that by the shape of the stochastics. They're starting to flatten out. This is another line here which many people might not be familiar with, which is called the Kopach curve. And please look it up on Investopedia. It gives you a swing directional picture. The Kopach curve is clearly telling you we want to go higher. Okay, overall. So Kopach gets very overbought at 30. You can clearly see from the shape that it wants to head higher. Now, these are swing things. It's not like what's going to happen in one day. Now, saying all that, this is the only other negative that I see is the standard deviation from the moving averages, unfortunately, is quite high right now. And when it gets this high, it generally pulls back. So That's my only thing. I would be a very aggressive buyer or price line at around 1368 to 1370 right here. Why? Because this was the multi-year breakout level. Can everyone see that? This was the multi-year breakout level right here. So 1370, you can write it down, would be, you should be an aggressive buyer or price line. 1370 is roughly 54 points from here. Is it possible price line comes like this? Absolutely. So if you're a robot, you would short the stock for 50 points and buy the heck out of it at around 1370. All right? So that would be the price line story. Now, saying all this, I don't want to, we've covered quite a bit, is as we go forward in the month of September, I warn everyone, don't expect for standard moves on stocks. Please, stocks will be wildly volatile. It doesn't matter what my swing charts say and what some other guru is saying, or whatever. I'm definitely not a guru. What they're saying, it's not going to be easy. So saying all that, if you're asking for easy moves on chart patterns, very important, it's not going to happen. So you have to be on your toes. You got some big profits, you got some nice profits, take it off. Because you won't know what's happening the next minute. There are going to be some real waves coming out. I put some very important dates out there. Please read it on the Twitter feed. I read that piece. Those dates match with what I say. If you don't read it, you'll be the first ones hurting. Okay? And it's right there. This article says September, important dates for capital markets. We have a Fed meeting on the 21st. We got a lot of talking head Feds. We got the ECB coming up with numbers this Thursday. Ladies and gentlemen, welcome to the world of random volatility. I've shown you a lot of points, but the market's going to move so fast and furious that if you took one big position on one side or another, the chances of you getting hurt are pretty big. Am I clear on that?
Yes.
And here's the good news. The good news is that you don't have to be like a crazy day trader either, but the other good news is that you can find some good tactical points on both ends, upside and downside, that we can take advantage of. But keep position size moderate, always cash on the side, and the best ways, in my opinion, I showed the gold trade. I think that's a good swing trade. Index trading, SPX and RUTs. Individual stocks, I can't vouch for the charts right now in the month of September yet. Just it, I can be bullish, I can be super bearish. So that's, so in the middle, I'll make profits in order to go. I mean, we can spend all night long in talking about different stocks which are really strong, like this Twilio. I mean, look, this stock could be $65 back to the highs. So you got 8 points on it.
Hey, Frank,
Go ahead.
The last comment on RUT look like it's a new high, right?
Okay.
All-time high.
RUT?
Yes.
RUT is not all-time high. RUT's high was all-time high was all the way up at 1300. RUT's chart is fantastic. Fantastic. You're thinking. I'm sorry, you're thinking the right way. You just it's not a high. This is a fantastic looking chart. And RUT's, it's better looking chart than S&P. The reason is commodities. Commodities are bouncing. 70% of junior gold miners and stuff are in the Russell 2000. You get it?
Yes.
A lot of these tech companies, which are the real high flyers, are in the Russell 2000. Okay? Not the big ones, the smaller ones. So what happens is, look at this pattern on RUT. Thanks for bringing it up, Tim. It is powerful. It's like, this is a bull flag, bar none. So if somebody, SPX great for trading, but RUT is solid. In my opinion, as you correctly pointed out, sir, this RUT is at least going to go back to its old high, which is 50 points from here. Now, at the 1300 level, money down, it's going to do a minor pullback before it decides to either break out. I don't think it's going to break down unless we see some real substantial deterioration in U.S. economic numbers. Remember, it's directly tied in with housing and U.S. growth, right? So as long as the housing stocks stay strong, which are a good portion of the RUT also, then the RUT will continue its higher. So this is a very positive chart. This is positive chart. Okay.
Yes.
And this is
Very
a this is a good looking weekly chart. Better looking than the S&P right now. But then at the same time, there's nothing wrong with the S&P weekly chart either. Let's go. We never took a look at it, so we'll just take a look at it before we sign off. The S&P weekly chart is pretty damn good too, but there's negative divergences going on. Here's a negative divergence. One, stochastics have crossed down. Nothing bad, but something to keep an eye on. And the vortex indicator, which is a trend strength indicator, is starting to come down. And this red one is starting to go up. So those are early warning signs, okay? Also take a look at the histograms. I mean, at the MACDs, they're starting to kind of come down. Now, in the meantime, chart pattern looks good. That's a bull flag. It's a bull channel, you know, above the breakout level. So all that is good. Look at what was the other thing I was going to show you guys? Oh, look at the blue line, which is the on balance volume, still climbing higher. RSI is overbought. That's a relative strength index. This line, it's pretty overbought. So what I'm basically saying is after a pause, which could be mid-September, which will be mid-September, not could be, will be mid-September, it'll be time to refresh and rush into October, but there's going to be volatility in October like we always get, generally the first half of October. And but if things work out, technically speaking, we're going to end the year higher. Okay, regardless of who wins, by the way, but in between there will be heavy turbulence. So, like I said, you know, that's really the long and short of the matter. And if you look at the last thing I'll show you, if you look at the weekly Bollinger on the S&P, it is showing around 2220, which I projected weeks ago. So 2220 would be the level of that breakout over this band that we discussed. You know, this trading band right there. This narrow trading band is not that narrow. It's 2160 and it's 2190, 30 points, right? Roughly 180 Dow points. This could break out this week before we get the nice correction in mid-September. It'll take the market up to 2200, possibly. I mean, that would be really big. But that's it. You know, that's the best way to answer it. But Tim, notice one very important thing on all of you, that we are overbought. We are pretty overbought.
Okay.
So last point, gold, focus on NUGT, focus on gold, whichever ones you play, GDX, whatever the case, but I like NUGT. Focus on individual stocks rather than saying, why isn't everything up on an up day? It happens a lot these days. You notice? You know, it's up there, this stock's down, that stock's down, this one's green. It's not a correlation. The correlation is kind of broken. We need even within biotechs. Big biotechs could be up, most of them down, selected ones higher. Stock selection is key. Size of trades is key. Always have some cash on the side. And then we do what we do. All right. So
okay.
I'm going to put this up. Tim, thank you for coming in. All the best to everyone's family. Happy Labor Day weekend. I will be connecting with you guys first thing in the morning. And thank you for your support. Appreciate it.
Thank you.
And everyone else who's been here for the first time. Thank you again. I'll be putting up on YouTube tonight. So pass the word around. If any of your friends want to listen to it, I'm sure they'll be impressed. And hopefully we get a chance to get more people in. All right.
Okay. Have a good night.
Have a great evening, everyone.